Assalamualaikum and salam sejahtera. As you know, my name is Loman Hakim bin Azman. My metric card is 08 DPR 118F 2030. So as you know, today my group and myself are going to present about global pricing chapter 7. So I'm going to start with the definition of international pricing. Global pricing is one of the most crucial and complex issues that global firms face, so it can give a break or a boost to a company revenue. It is important because price is the only marketing mix that generates revenue, all other intel costs. Local pricing versus global pricing. So there are some factors that influencing global pricing, such as cost, exchange rate, competition, distribution system, nature of product or industry. So I'm going to explain about the global pricing. Exchange rate changes in relationship to the target market. International transportation costs keep in view the mode of transport used. The international channel of distribution cost is respect of the product concerned. Nature of international market regarding trade practice and marketing environment, both at the micro and the macro level. So, global pricing is a lot more complex than domestic pricing due to international currency, price escalation, difficult to assess credit risk, price control, regulation, and method of payment. As you know, there are certain countries in the world that have their own way to run the business. And I'm going to go to the last slide. There are certain global pricing strategy. One of them are manager must determine the objective for the pricing objective, unit sale, market share, return on investment, product life cycle. They must then develop strategy to achieve those objectives, penetration pricing and market scheming. So that's from me. Thank you.
Assalamualaikum, my name is Ahmad Amin bin Mazafrin, 08 DPR 18 F 2034. This is chapter 7 and I'll be talking about global pricing issue. There are two global pricing issues. Number one is Europay, MasterCard and Visa or EMV. And the second one is Anti-Money Laundering Council. The first one, Europay, MasterCard and Visa. Europay, MasterCard and Visa is a global electronic transaction standard named after the three organizations that established it. The EMV standard enables EFTPOS terminal worldwide to process chip-based debit and credit card. Chip card offer a more secure way to process card transaction. What is EMV? What does EMV stand for? EMV stand for Europay, MasterCard and Visa. What is EMV? EMV is a technical standard for advanced credit and debit cards when used at point of sale, terminal or ATMs, often referred to as a smart or chip cards. And the second one is Anti-Money Laundering Council. The AMLC, Anti-Money Laundering Council, functions as regulator, financial intelligence unit, and law enforcement agency. Its mandate include protecting the Philippine financial system from the crime activities and extending cooperation to other international financial regulator engaged in money laundering investigation. Thank you.
Hi, good day everyone. My name is Muhammad Hafizi bin Muhammad Hafizal, 08 DPR 18F 2046, and I'll be talking about term of payment method used in global market. Firstly, we have cash in advance. cash in advance is a payment term, whereas the buyer have to pay the seller before receiving the goods. Wire transfer and credit card is the most common form of cash in advance used for international trade. Next, we have letter of credit. Letter of credit is considered one of the most secure payment methods for international traders due to the bank's involvement. A documentary collection is a process in which a seller instructs their bank to forward documents related to the export of goods to the buyer's bank with a request to present this document to the buyers for payment, indicating on what condition this document can be released to the buyers. An open account transaction is a sale where the goods are shipped and delivered before payment is due. Next, we have consignment. Consignment is another method of open account where the buyer only makes the payment towards the seller after he successfully sold the goods he received from the seller. Finally, we have bill of exchange. Bill of exchange is a bill drawn by a person directing another person to pay an amount of cash to another person.
Hello and Assalamualaikum. My name is Muhammad Amashim Shahil. My printer number is 08 DPR ATF 2029. So, I'm continuing on the role of export financing for the successful export marketing. Alright, so we have several items. That is first, commercial bank and merchant bank, export credit insurance, discounting, factoring, leasing, contracts, government and its agency. Then we have three items. There is MIDA, SMIDA, and Exim Bank. First, commercial bank and merchant bank. Commercial banks are the financial institutions regulated by the Reserve Bank of India, typically offer general banking service to individuals as well as business organizations. And we can say, what is the merchant bank is? Are the financial of the company that offer their service to the business corporation at high net worth person. As you can see, they have many different than commercial banking and merchant banking. The first is for the commercial banking, anyone can open an account. But for merchant banking, it cannot be done. And also for the commercial banking, we have a less exposed to risk. But for the merchant banking, we have a more exposed to risk. And we can tell also that commercial banking is asset oriented, but commercial banking is management oriented. So they have many different between the commercial banking and merchant banking. Number two, export credit insurance. We can say export credit insurance is a policy ensure your accounts receive well and protect your business from unpaid invoice that be caused by political risks such as customer or bankruptcy or maybe another reason they agree with your insurer. We can see also as a debtor insurance or trade credit insurance or account receivable insurance. Number three, discounting. Discounting is the process of determining the present value of a payment, or we can say a stream of payment that may receive in the future. They are given by the time value of money. A dollar is worth more today than it will be worth tomorrow. It is also, we can say, discounting is the primary factor that used in pricing stream of tomorrow cash flow. As you can see, this is the cycle of discounting and compounding. The first is we can say we have this discounting using the discount rate, going to present value, and for the present value, we're going to compounding. There is usually compound interest rate, there is still our future value. It is a cycle that we need to know. Number 5, leasing. A leasing is a contract that outlining the term under which one party that agrees to rent property owned by another party. It also a guarantee the lease, also known as a tenant, as use of an asset and guarantees the lessor, the property owner of the landlord regular payment for specific period in exchange. So as you can see, there is advantages and disadvantages of leasing. For the advantages, you can say we have the quality assets, tax benefit, better planning, and commercial right, and we have more. For the disadvantages of leasing, we have also a debt, limited access for under the loan, limited financial benefits, and reduced return for equity holder. So, in leasing, we have advantages and we have disadvantages of a leasing. Number 6, counter trades. Counter trade is a range of barter like an agreement that facilitates the trade of goods and services for other goods and services when they cannot be traded by money. In barter transaction, we can say the seller and buyer have their own situation. That is, the seller provide the goods or services to buyer, and the buyer provide goods and services to seller. Its example, the seller have a chicken and buyer have their own uh, paddy or rice. So the seller provide 3 eggs of chicken eggs to buyer. At the same time, buyer gives some of their rice to seller. It's like a barter transaction. And the last point is government and its agency. Then we have 3 items, that is MIDA, SMIDA, and Exim Bank. Number 7, MIDA. MIDA, or we can say Malaysian Investment Development Authority, there is a government, their principal agency to oversee and drive investment into the manufacturing and service sector in Malaysia. There is started in 1697. MIDA was given to mandate to promote investment as the manufacturing and the service sector to advise the Ministries of International Trade and Industry Meeting or Industry Matter of Inclusion, Promotion-oriented policy. We can say now MIDA is Malaysia's cutting edge that is dynamic and pioneering force in opening pathway to a new frontier around the globe. MIDA to assist companies which intend to invest into the manufacturing and service sectors, as well as facilitates the implementation of their project. The wide range of services provided the MIDA include the providing information on on the opportunities for investments, as well as facilitating companies which are looking for a joint venture partner. This is the MIDA, Malaysian Investment Development Authority of Logo. Number 8, SMIDA. SMIDA, or we can say SME Corporation Malaysia, SME Corp Malaysia, is the central coordinating agency under the CCA, Ministry of the Entrepreneurship, Development and Cooperative, MEDAC, that coordinates the implementation of developments that program for a small, medium enterprise (SME) and cross-oriented ministry and agency. And number 9, Exim Bank. The Exim Bank, or we can say the Export-Import Bank of the United States, abbreviates as Exim, or known as the bank, is the official export credit agency (ECA) of the United States federal government, operating as wholly owned federal government corporation. The bank assists in financing and facilitating U.S. export of goods and services. This is the Exim Bank in Malaysia. It's located is Level 1, Jalan Sultan Ismail, Chowkit 502250, Kuala Lumpur, Wilayah Persekutuan Kuala Lumpur. So, that's all from me. Thank you.